Hey, welcome to the show. I'm Mitch Goldberg, your host. Be the boss of your money. Thanks so much for joining me. Yeah, I took a little time off from the show, about a week and a half, 2 weeks. Listen, I've been doing the show now for coming up to 5 years. I can't believe it. I love doing this. I love sharing with you the information that I have gathered from serving hundreds and hundreds of clients over the years, millionaires, multimillionaires, and future millionaire and multimillionaires. I've seen people retire. I've seen people get started. I've seen people go through the retirement, unfortunately pass away, leave money to heirs, and it continues. I've seen people do all kinds of things. I've seen people overcome lots and lots of financial challenges. Not to mention, I've lived my life and I can share a thing or two about overcoming challenges too, which is why you should watch the show. That's the value, overcoming challenges. This is called Be the Boss of Your Money. Another name for the show could be Money Control or Take Control of Your Money and Feel Better. If you're better with your money, you'll probably be better in your life. That's a real statement from a real financial advisor. I've been doing this a long time. I want you to come along for the journey. If you have any questions for me, hit me up in the comments. We cover a lot of different subject matters here, from Social Security, interest rates, mortgages, you name it. We're talking about it. All about retirement, Medicare planning. We want you to be better with your money. We want you to get through your 30s, your 40s, your 50s, your 60s, and your 70s, and on and on. And we want you to do it. We want you to get through life in one financial piece. Now, understand this: financialing, I made up a new verb. Financialing is not just a one and done thing. It's many, many little steps, which hopefully many of which will become habit forming. You start to put together little financial habits, little tasks, little to do things. You do this, you do that. And before you know it, you're living your life and you're not even thinking about being better financially. It's just happening naturally. But it does take work. We're not all born with a financial acumen or a financial sense to be better with our money. So that's why I want you so badly to become the boss of your money. Be the boss of your money. We're going to talk about a couple of things, in particular, stretch IRAs. They're gone. And what this means for any of you who have inherited an IRA in the last few years or who expect to inherit an IRA. It's pretty important. It'll take me about a minute to go through that. And then I want to talk about Hope Springs Eternal, because Tesla has just showed us that we are still in a bull market. Because in a bull market, even the most speculative news that you might think isn't so important, stocks go up. So let me roll a quick intro and we're going to get into this real quick, and we'll be off in about 5 minutes. So stick around. This is going to be good. Here we go. All right. When you give the show a like, you give it the thumbs up, you give it a heart, whatever reaction, a wow or an applause, whatever reaction is, the rest of your contacts in social media see it. And it helps spread the good word about the financial education that I provide here almost every single day. And if you check out my LinkedIn profile, my YouTube channel, or my Facebook, our Bobby and my Facebook page, you will see all of our videos and all of the short videos. We post 30-second to 1.5-minute videos all the time. Just real quick hits of vital financial information to keep you informed and to make you better. And we want to do it quickly because you know how valuable your time is. So please give us a thumbs up, ask questions in the comments, or if you just want to say hello or share with us your favorite emoji in the comments, that would always be really cool as well. All right, so let's get into it. There used to be something called a stretch IRA. So if you are a child of somebody who passes away, or a cousin, a relative, if you inherit, you don't have to be a child, but if somebody leaves an IRA to you, an individual retirement account, okay, And it could be a Roth IRA, it could be a traditional IRA. You would have a lifetime based on IRA life expectancy tables to take that money out, which means you could potentially make that money in an IRA that you inherit. You could make it last for the rest of your life as well. And that could come in handy in growing your wealth, paying your future bills, keeping you ahead of inflation. If you can potentially attain some growth in the IRA, depending on what kind of investor you are, right? Conservative, moderate, growth, aggressive, those sorts of things. And you would have years and years, but not anymore. The Secure Act 2.0 did away with that. So after 2020, if you inherit an IRA, you have 10 years to empty out the IRA, not 30, not 40. A lot of people don't realize that. Now, there are some other intricacies here that are important to know. If you are the spouse, you inherit an IRA from a deceased husband or wife, then when you inherit that IRA, it becomes your IRA, and it becomes based on your life expectancy. Unless you're like substantially younger than than your deceased spouse, then that's a different story. But I'm not going to get into that right now. So you have a lifetime of that money. But if the person was taking required minimum distributions from an IRA, and you're a child or a friend or a relative other than a spouse who inherits an IRA, you are supposed to continue with those required minimum distributions, even though now you have to take the money out of the IRA within 10 years. Year 1, year 2, year 3, you're supposed to take out those RMDs. Now, the IRS for 4 years in a row now has waived the penalty to do so, which kind of stinks for the people who were compliant and did take out their required minimum distributions. Let's say you inherit an account from a parent and they were taking RMDs. Now you as a child, an adult age child, inherits that account, that IRA. You're supposed to go along and keep taking out those required minimum distributions. There's a formula to figure that out. Very easy to do. You can ask your accountant. You can ask me. It's not hard to figure this out. You could actually go to the IRS website and look at the tables and pretty easily figure it out yourself. But having said that, you have to take that money out. Even if it's only a small amount of the account, you still have to take it out. Now, the IRS has been giving a waiver on that, meaning you're supposed to pay a penalty of at least 50% of the money that you didn't take out, not to mention the taxes and that you're supposed to pay on it. But the IRS said, okay, people don't know about it. But for my clients who've been compliant, they could have avoided taking those RMDs because they didn't need them in some cases. I think what'll happen is at the end of the 10 years, when you're done with it, the IRS will get those taxes from you and say, by the way, you didn't pay taxes on those couple of years of RMDs, so we're going to hit you over the head for something. So I don't think there's going to be a free lunch on this, but it's not really understood yet by the public. And I don't even think a lot of accountants are fully grasping this either. So that is that. Now, if you're also the child, a minor of someone, okay, if you inherit an IRA now as a minor from, let's say, unfortunately, a parent, then the minor could turn the IRA into a stretch IRA. But I believe the cutoff age is 16. I'm not sure if it's 18 or 21 or 16. I think it's 16. We'll have to check that. But you need to make sure you check with your CPA. I'm not a tax advisor, so you have to check with your own tax advisor. Okay, I don't give tax advice, but sometimes I have to talk about taxes in the scope of just what I do and how I advise people in terms of IRAs and IRA distributions and tax withholding and all those important functions that we provide for you. So that is the deal with that. Let's move on now to the market. Hope springs eternal. I'll share with you my screen real quick. Let me pop myself in here. Okay, let me pop myself in here. All right, I'm not popping myself in there right now, but am I stuck here? No. Okay, let me just. Oh, I see what I did. Okay, I haven't done this for like 2 weeks, and it's almost like I forgot how to do it. All right, that's better. Thank you. Okay, there I am. Okay, I know you saw me in the picture, but I couldn't see it on my end yet. All right, but Tesla's been getting absolutely crushed the last couple of weeks, down to a year low recently of 138. And now it's back to 194, up 25 today. It was up a lot. It was up about 10% on Friday. So let's call it 25% rally in 2 days. For a large cap stock like this is a pretty substantial up move. Why is Tesla valued one day at X amount? Let's see. Why is Tesla valued one day at $618 billion, and a week before it's valued at $500 billion? This is the nature of what we call volatility. This is why we say stocks like Tesla are historically, they've been volatile. Big ups, big downs, big risk, big reward. If you're a long-term investor, you could almost conceivably say, if you're never going to sell, that your trade is basically risk-free. I mean, think about that. If your time horizon is to die with your portfolio intact, then you don't really have to worry about risk. You could take as much risk as you want. So my compliance peeps, don't get me started by saying, oh, you can't say risk-free. That's not what I mean. I'm not calling Tesla a risk-free investment. I'm saying generally, outside of Tesla, if your time horizon is forever, then isn't that like risk-free? You don't have to worry about risk anymore. Well, now we know, no one's Rip Van Winkle. We don't have forever time horizons, but I digress. But what Tesla's showing you is that just the worst of everything that could happen to Tesla, a CEO who is extraordinarily controversial, extraordinarily political, who has put himself in a position where most CEOs don't go for the obvious reasons. We avoid politics and religion, especially when you're leader of a big company. You've got a lot of shareholders. It's your job to move the company forward, not to put your political or religious agenda ahead of you. I'm not saying that's what Musk did, but these are the two topics we avoid that CEOs typically avoid: social causes, things like that. They just want to make sure they're staying in the middle. But Musk pushes the boundaries. Some people like him for that. Some people don't. But as a shareholder, I've talked about this before, I'm not really crazy about management of publicly traded companies that I invest in taking bold stands. I'm interested in earning as much of a return as I could get for the amount of risk that I'm willing to take. And when CEOs inject themselves into certain causes or certain politics, it does make me wonder why I'm holding on to a stock like that. That is not specific to Tesla, but we all know that Musk is a pretty controversial guy. But the worst thing that happened is, few of the worst things that happened, he took his eye off the ball, focused on Twitter, which he renamed X, focused on a lot of things, but it seems like he's getting his focus back on to Tesla. And after a crummy earnings report and the stock bottoming for the year and losing more than half its value in less than a year from its former peak, the stock is now rebounding pretty hard. What the worst thing that was happening to Tesla is they were starting to be valued like a car company. Now think about that. Car companies are typically valued 5 to 10 times earnings. That's how they're often valued. And I'm just going to look real quick. But Tesla's about 50 times earnings. So if it was valued like a regular car company, it would be a lot lower of a stock price. But he came out and said in their earnings report, as bad as it was, we're now working on our next project, which is a really affordable EV, lighter, smaller, cheaper, and that's something that got investors juiced up. He did make do with his promise. He got that truck out, that Cybertruck. Have you seen it? It looks like a big refrigerator in like at the back of a pickup truck. That's a dump truck that's a little up a little bit, But I have seen a couple of those in the road here in Long Island. I don't know. It's kind of cool looking, but it's kind of weird looking. I don't know what to make of it. It's just something that is so unusual. But then he said in China that Chinese regulators are about to lift the ban on the self-driving technology of Tesla. That self-driving thing is considered the holy grail of car companies, of technology. And with all the miles logged of Tesla and using their self-driving technology, the more data you put into artificial intelligence and specifically into self-driving technology, the better it gets. So it's a race to who can see who has the most hours of self-driving. And that's a race that Tesla very much wants to win. And they are winning it as perceived by investors. And that's why the stock has gone up. And it looks like Musk has put his focus back on to Tesla. And now Tesla can rally. I'll never forget the day when he announced that Ford, I think GM and Volvo, maybe other car companies, are all going to use now the Tesla charging stations, which basically makes Tesla one of the biggest gas station owners, if not the biggest in the world. They have a giant footprint now all over the country of charging stations. And this stuff is starting to come together. EVs are hitting the road. The infrastructure is starting to develop. So this is all very bullish for Tesla. And that's why I say hope springs eternal, and rumors of Tesla's early demise are greatly exaggerated. And then we take a look at other stocks like Boeing, which has rallied. And you're starting to see some of the stocks that are viewed as now cheap are rallying. And that's one of the things that's driving up the market today. We'll see if that spreads to Meta, which absolutely tanked last week and has not bounced back yet. But we'll see. They had a phenomenal earnings report. And I think investors, in my opinion, will come around and look past the money that Meta, we used to call Facebook. We used to call it Facebook. Facebook changed its name to Meta. And I think investors will come around and start to look at Meta as all the money they're spending as a positive, not a negative, because they're just pouring so much money into developing their artificial intelligence offering. I think Zuckerberg has his eye on the ball, CEO of Meta, and I think he deserves the benefit of the doubt. And he has made these pivots before. And when he sees a way that you have to go, like artificial intelligence, he's determined to do it. And the stock price up or down is not going to, it's not only not going to deter him, it's not even going to distract him. These are not buy or sell recommendations. I'm just telling you the way I think investors are going to go. It's the same old, same old. Investors are going to flock back to the Magnificent Seven stocks. And I don't think anything has really changed. I think we're still in a bull market, and we're living with higher interest rates. And the draw to the market recently is that the Fed would cut rates, and now the Fed might not cut rates at all this year. Inflation's still a little too high. The economy's moving a little too strong still. And we're still living just fine in the market. And that to me is very bullish. And last thing I'll say is the VIX, the volatility gauge, was around 20. It's back down to 14 already. So the fear just like went out of the market, and the beat goes on. All right, that's it for the show. Thank you so much for joining me. I haven't done the show in a couple of weeks, and we're going to make some changes to it coming up. You stay tuned. They're going to be good. All right, take care. Thanks.